Ghost cities galore. Hello and welcome to today's Daily Blitz. Now, as I'm sure you've seen all over the press, the coronavirus fear is spreading, and we've seen that reflected a lot, not just in the stock market, but you're seeing it a lot in the lending market as well. So the People's Bank of China has extended their largest short-term lending operation since 2004. So largest short-term lending operation in one day, should I say, since 2004, with £130 billion worth in short-term lending being extended across the money markets. You're also seeing, interestingly, the Chinese government have banned short selling, that old chestnut in a time of crisis, and they're also preventing major stakeholders in companies from selling any of their stock for 6 months. Now, despite all of that, the Chinese stock market is down 8% in a day, last time I checked anyway, and that's down 10% if you adjust for the currency depreciation as well. So really quite a significant shock despite all of this stimulus that's being thrown at it. But in today's video, I'd just like to take a look at what might be coming next. What would be the Chinese Communist Party's next move in attempting to ensure stability effectively across the country. So what the Chinese Communist Party cannot account for, really cannot survive under, is social unrest, and that's why they crack down so brutally whenever it does occur. Now, if the coronavirus creates economic stagnation because people aren't being productive, because people are out of work, because they're not receiving wages and the like, then what's going to happen is you're going to get that stagnation, you're going to get that unrest, and that is going to be something that is unacceptable. So what investors should expect to occur is the Chinese government just to follow their normal playbook really for the last 40 years, which is just to lay out a huge infrastructure spend in order to keep some kind of activity going on in the economy, even with all the coronavirus disruption. Now, as we dwelled on in last week's video, I brought up the huge commodity import bill that China generates and how China has effectively become one of the biggest players in the commodity market. If China does really anything in the commodities market, you see a big move in the price, not only of the commodities, but then of the miners as well. So though the commodity market has been absolutely hammered by the coronavirus because China is such a big buyer, so what I think investors should expect is that the commodities market will tick up again after the Chinese government rolls out some massive infrastructure spend in order to keep all the plates spinning and all the balls in the air as far as their economy is concerned. Now, to give some context as to what that really might look like, between 2011 and 2013 in China, more concrete was poured than was poured in the US in the entire 20th century. That is the huge scale that China brings to the table. And it's led to these strange statistics that you see with 50 million apartments in China that are completely abandoned and entire ghost cities. Well, you're going to see an awful lot more of them if the Chinese government does go through the infrastructure route in order to try and stimulate some kind of economic activity. The key theme to dwell on here is that China will pursue a policy, I believe, of growth at any cost. And growth of any kind requires commodities, which is why I think the commodities market will see some kind of uptick when you see the response from the Chinese government to keep the economy moving. But that sums up today's Daily Blitz. Thank you very much for watching. Be sure to tune in the next one.